What's up, everybody? Welcome to the Stocks channel. My name is Corey. In today's weekend special update, I want to take a look at the SPX on a weekly chart and see if we can tell if the stock market is going to boom or bust after the US election. Now, there's definitely a stock market crash narrative going around, and I want to address that head on. So before we jump right into these charts, please go ahead and smash that like button. And if you're new, go ahead and subscribe to my channel so you can follow along with all of my daily updates. Now let's go ahead and crack open this chart and see what's going on in the stock market. Alright, so before we decide where the stock market's going, let's go ahead and take a quick history lesson on where the stock market came from. So if you go back to the crash of March, we did see the stock market start to sell off in February and we bottomed out around the middle of March. So this by far is a stock market crash. And we did see capitulation in the stock market where everybody that wanted to get out of stocks did. And we reached a very critical market bottom. Now from that market crash, we had an extremely bullish rally from that bottom. And we've been rallying since the bottom in March all the way up to the highs in August. So this move here is a 5-wave Elliott wave move to the upside, which is a bullish rally. Now we know after a 5-wave move to the bull side, we could expect an ABC correction to the downside, which is a correction to the bullish move. So right now, if you look at this weekly chart and you look at the price action we're getting, we definitely have this sort of ABC correction going on. Now coming out of an ABC correction, we could resume that bullish trend, or we could go back into a bearish trend, which would be a downward move after that correction. But right now, we're still fully in this ABC correction, and we can't guess whether or not the stock market is going to go up or down. We can do some analysis and try to find the highest probability chance, but nobody knows for sure if the stock market is going to crash. Now, one thing you can see from this chart is we do have a bullish momentum trend still going on this chart. On the weekly chart, you can see that the 5 EMA is still trading above the 13 EMA, and we still have a positive sloping 20 simple moving average, as well as a positive sloping 50 EMA. Now, one thing to note about an ABC correction is the C wave is typically some Fibonacci extension level of the A move. So if we take a Fibonacci extension, we can see that the C wave is now closing below the 0.618 Fibonacci extension level. Now the next level down would be the 1X, which is right around the 50 EMA, which is at a 3166 level on the SPX. So right now 3166 is the price target we have to the downside, and that's going to be a price level right at the 50 EMA. So we can't just assume the stock market is going to break through that support level before we see what it does once we get down there. That level is absolutely a support level for the bulls to build off of, and we will look back at the stock market in previous years and see how the stock market has held up around these levels. So right now, we still think that this is an ABC correction that could go down to a 1X Fibonacci extension level. Now the C wave could go all the way down to a 1.618 level, but you can see at that point, if we did start getting there, we would be outside the lower Bollinger Band. That's not saying it can't happen, but it would definitely have to be a stock market crash to get down to that level because it's not currently looking likely. So right now, the highest probability chance is the 1X Fibonacci extension level at 3166, and there could be a bounce off of that level if we get there because it will be a very strong support level. So let's go ahead and clean up this chart and take a look at one more thing. From the highs in August to the lows in September, that was about a 10.6% pullback, and then we got a nice bounce to the upside again. Then the next high we made was a lower high, and from there to the low currently, we've had a 9% pullback. Now, if we go all the way down to the 50 EMA, which is the support level we think we will find support, that's somewhere around an 11% pullback. So from the close on Friday for the week, there's only an additional 3.3% pullback before we have very critical support levels that we could bounce off of. And don't forget, if we start bouncing off of that support level, that could mean that the ABC correction is over and we could go back into the very strong bull trend that we're currently in. Remember, we are in a bull trend. That is not a bias, that is a fact. We have the 5 EMA trading above the 13 and we have a positive sloping 20 simple moving average. We are looking at a weekly chart, so this is strong data to look at because these trends take a long time to build and they don't just break overnight. They take a long time to break because they take a long time to build. It would take something like a stock market crash from March to cause these trends to break. So I'm not ruling out a crash. I'm just saying it does not look likely with the price action. We had a very bearish week, and you can tell by how large this red candle is, but it's going into the US election and we did expect to see high volatility. So it's still completely normal if we can trade above the 50 EMA and find support there. we could still maintain a long-term bullish trend. So now that we've talked about where we are in the stock market, let's go back in time and see how the stock market has acted on previous US elections. Now, before we do that, let's just scroll back through this chart and let's take a look at how these moving averages hold up as support. So you can see we do have support levels at the 50 EMA multiple times, and sometimes we even close below the 50 EMA and start to go below the 50 EMA the next week just to bounce right back through and close higher. So there is going to be the opportunity for a bear trap if we start going below the 50 EMA. There's no guarantee that the bears are just going to short this market into the center of the earth. There's still the opportunity for bull traps and bear traps. So you don't want to get overly confident and you don't want to have too much of a bias in this market. You want to wait and watch the technical trends and the data and make a decision that's not based off of some emotional bias. So in these three cases, you could see the 50 EMA was critical support levels in 2019. And if we continue to go back, in 2018, when we closed below the 50 EMA, we were in a bear market because we saw the 5 EMA trading below the 13 EMA. So this is what a bear market will look like, is we will get a bearish trend and we will get bearish price action. You can see that that does not look like today's price action or today's trend. The 5 EMA was below the 13 EMA and the price action was trading well below the 20 simple moving average and the 50 EMA. That is what a bear market will look like, and that is why you can tell we are not currently going into a bear market until we see something change on the technical trends on the weekly chart. Now, if we keep going back in time, you can see we did hold up above the 50 EMA as support also in 2018. So you can see how critical the weekly chart is for maintaining a long-term bullish trend, because it's very easy to look at small time frames and forget that the stock market has to correct and has to pull back, and it's not necessarily a bearish sign. You can see all throughout these pullbacks that the 5 EMA was still in a bullish trend, and while it did cross under, it was on a huge correction and it resumed that bullish trend because we maintained above support. So don't forget, price action is king, and we're always going to favor price action over technical trends. And then technical trends are our next best friend, because typically speaking, if we're on the side of the trend, we're going to make a smart trade. So I think that's enough on the trend and the 50 EMA on the weekly chart. Now let's go ahead and go back in time and start looking at some of the other US elections. And also, if you're still watching and enjoying this video, please let me know by smashing that like button. So this is the part of the video where we're going to take a look at previous US elections, and we're going to jump around into 4-year intervals just on the same exact date that we just closed on Friday. So in 2016, going into the US election, you can see that we did have a bullish trend. The 5 EMA was above the 13 EMA, and we did have volatility going into the election, and we did trade right under the 50 EMA. Now, after the election, you can see that volatility went away and we had very good things happen in the stock market for many, many months to come. So you could compare 2016 with today because we have very similar trends and very similar price action going into the US election. Next up is 2012 US election, and we can see we did have a bullish trend going into the election, and we did have bearish price action around the time of the election. After the election was over, we can see that that bullish trend did resume, and we did have very strong bullish market after the US election was over. Next up is 2008 US election, and we can see going into the US election, we did have a bear market and we did have a lot of volatility. We were trading below all the moving averages, and we were in a strong bear trend, as we can tell from that 5 EMA below the 13 EMA. So I would not consider this to be anything like today's market, so it's really not anything to look at, but we did see eventually we did get bullish price action, but it did not come immediately after the election. However, going into the election, we were already in a bear market, so obviously the US election wasn't bullish enough news to change that trend. Going into the 2004 election, it looks like we were in somewhat of a sideways market where we really weren't going anywhere. After the US election, it looks like the market decided which direction it wanted to go, and we did get a nice bull trend following the 2004 US election. Note that the price action was trading right around the 50 EMA and just above it going into the election. Price action is king, and price action above the 50 EMA is always going to be bullish. Going into the 2000 election, we can see that we were going into a bear market. The US election did not change that, and the bear market kept resuming. Going into the election, we were in a bear market, which is not comparable to today's market. 1996, you can see that we were in a bull market, and after the election, that bull market continued, and great things continued to happen for months to come. 1992 US election. Bullish price action in the start of a bullish trend, and after the US election, that bullish trend continued and good things continued to happen. 1988 US election, bullish price action and bullish trend, and after the election we had a lot of volatility, but then very good things continued to happen for months to come. And then 1984, this will be the last one we do. Bullish price action, bullish trend. After the US election, we got volatility, and then a very strong bull market continued afterward. So let's go ahead and summarize here and pull this all together. We can see that if we're going into a US election and we have a bullish price action and a bullish trend, typically speaking, after the US election, volatility will subside and the bullish trend will continue. If we go into a US election with a bearish trend, it's really a toss-up because the US election usually doesn't reverse that bearish trend, but typically speaking, the stock market is more often in a bullish trend than a bearish trend. So it wasn't surprising when we look back over all the elections that most of them were in bull markets. And it also shouldn't be surprising that most of them remained in a bull market after the US election. So remember, no bias here, just probability and what's more likely to happen going after this US election. We currently have a bullish trend and we have bullish price action. So we are going to give probability chance that we could come down to the 50 EMA at 3166. And then after the US election, we are expecting volatility to subside and we are expecting another strong bull rally to continue after this US election. If you don't agree with me, that's completely fine. And obviously anything is possible. I am just saying, based on what I can see on the charts and based on what's happened in the past and where we currently are, I am giving a higher probability chance that the stock market is going to resume into a strong bullish trend after this US election, and I would be more biased to the upside because the price action and the trend are our friend, and we follow the price action and we follow the trend right here on the Stocks channel. So I hope you all enjoyed this special weekend update, and if you did, please go ahead and show me your love by smashing that like button. If you're new to the channel, we do technical analysis every single day right here on the Stocks channel, so go ahead and subscribe to the channel and turn on that notification bell. Thanks for watching, everybody, and as always, I will see you in the next episode.